Hello and welcome to Profit Over Turnover. Hi, I'm Carmel Siri, your host and founder of Profit Flow, your strategic partner and the missing link between revenue and real profit. On this episode, we're going to talk about profit and cash. So they're actually not the same thing. A business can be very profitable on paper, but can run out of cash. And when that happens, it can be a disaster for the business. Profit will tell you whether or not your business strategy and your business planning is working, whether or not you have a good business. You know, from day one, you would have sat down and thought about the price that you're going to charge your customers. You would have looked at your costs, and then you would have looked at what your profit should be on paper. When you get your actual accounts, which you should be looking at on a regular basis, you will then take your sales and your costs and look at what actually happened in a set period of time and whether or not you made profit or loss. And that is a really important step to be doing in your business. You need to make sure that from the theory of when you are sitting down and building the strategy and starting to look at building the business, that theory has come into actual profit in your business. Profit will tell you whether your business model is working. Cash will tell you how well your business is going to survive. When we dig into profit, profit is when a sale is made. So when we look at our example here, we're looking at our March 2026 accounts. We're seeing that sales are invoiced. We invoiced 20,000, and after deducting cost of sales and overheads of 8,000, we had a net profit of 12,000. Now you substitute the figures in your business into these different categories and you will come with a net profit figure of your own. But there's a couple of things that you need to think about. And one is, what are the terms of payment that you're giving your clients? How many days are they on average taking before they pay you? You might give them 10 days, you might give them 30 days. They might be taking 40 days, or they might even be taking 60 days, depends on the type of client and how big they are. So therefore, an invoice or invoices that you raised in March may not hit your bank account until mid-May. So that is 2 months that you've actually theoretically made your 12,000, but you haven't seen any of that money yet. Now, just quickly, if we looked at the bank in March, so on March 2026, our bank balance was 5,000. We had expenses of overheads and cost of sales of 8,000. Now, there may be a timing difference on this as well. You may have paid for some of these before you had your bank balance here of 5,000. Or maybe you have 10 days credit. But chances are you're paying out suppliers and overheads faster than you're getting the money in. So in this scenario, you're 3,000 overdrawn. And that, is what keeps business owners awake at night. So we want to minimize this as much as possible. So some of the traps that business owners can fall into is that they believe, because they've done the theory on what their sales are and their costs are and their profit should be, that they know that they're profitable and that the business is a profitable business. And therefore they feel that that's okay. They can just they don't have to check their numbers, they don't have to keep track of everything that's coming in, and that the money will look after itself. They also would look at their bank account, and you may have a healthy bank balance in your bank account, but if you're not doing regular bank reconciliations and forecasting, you will forget certain things that you have to pay. So once your bank balance is okay, you think, oh, the business is fine as well because I have enough money to pay my bills, but you may have forgotten tax, the VAT, the tax. You may have forgotten to pay a certain supplier, and you may want to have a capital purchase that's coming up that you think, oh, I have money in the bank, I'm going to go ahead and do this, but you're forgetting about other bills that are need to be paid. So that is something that you need to watch.